FX Nation, what's up guys? Welcome back to the channel. Welcome back to another video. And in this video guys, we're going to take a look at two specific trades from last week. The reason that we're taking a look at these two trades is because I got a lot of messages about them, and I guess a lot of people got caught in these trades. So I'm going to show you these two trades. We're going to go over them with a fine-tooth comb, and I'm going to show you how not to get caught up in these bad trades. Alright guys, so that's what we're doing this week. So let's go ahead and get into this video. Alright guys, so the first trade we're going to look at is pound JPY. Okay, now what I want you guys to do is just let's go through this together here so we can understand what's happening, what traders might be looking at, how they could possibly interpret it, and what their actions could have been versus what it should have been. So first things first, pound JPY 15-minute chart. This was last week. All right, so I'm going to start to play this, and essentially I want you guys to just pay attention as to what's happening right after the Asian box. Okay, so look at what's happening after the Asian box. You have basically price moving sideways and basically right above the 800. Okay, now if we pause it here, we're probably at what, 330 around this time. Okay, now some of you may have looked at this and saw a W here, and of course you saw the TDI down here, and you saw the crossover, so you're like, hey, this may be a good trade to go. Hell, some of you may have even gotten in on this trade on the second leg here, right? Because you thought that essentially this was a W here going up, right? So if you thought that, let's put out the little measuring here. So if we're just trying to get, let's say, to 30 pips, right, we're basically trying to get up to basically the top of the range, right, if you're going into this specific trade. So what are the things right now, just by looking at this, that are I guess that you're looking at that could be, potentially in your favor? So you're looking at it and you have something where you have price that's basically bouncing off an 800 EMA. Okay, so that's one. Two, you may have a crossover here of the TDI going back up, so that's two. What else? Anything else? That's not it, right? That's pretty much the only two things that I see that essentially would, as far as confirmation that you have, is just a TDI crossover back in, a hook basically on the crossover on the TDI, and then you have a mini W there forming, and then you have, of course, your price staying above the 800. All right, now if you follow our rules, one of our main rules that we follow is never trade until you get a crossover the 5 and 13. That's basically, kind of like your entry signal there. So if you're entering in this trade now, your goal would basically be to get to the top of the range, right? Number one, you're not following, same rules that we follow, whatever. But if this is what you were thinking or looking at, then that's what essentially you could have potentially be looking or thinking, right? So as we move along here, you can start to see what is happening. Essentially what is happening is price is getting stuck. It's moving straight sideways, right? It was moving straight sideways from, let's say, 330 all the way until 430. So for a straight hour, moving sideways. Okay, and then what happens? What happens is we got a nice bar. Nice straight bar up. Now this bar right here would have probably gotten a lot of traders to commit to going long. Okay, and here's a reason why. It's because you basically had on this bar here the crossover, the 5 and 13. Okay, so 5 and 13 crossed over, and then you know, you would have let's say entered the trade. Now, if you're looking at this, you're like, okay, well, it crossed over on the TDI, you know, it moved sideways for a while, so it basically held below, you know, right above the 800, which is good, and then we just had a crossover of the 5 and 13. All right, so those are all your rationing to yourself that you may be thinking about whenever you're looking at to getting into this trade. Now, a couple things. If you wait until the 5 and 13 cross, okay, you're going to run into a couple things. Number one is you're not getting a 2-to-1 risk to reward ratio, which is something that I would always tell you that should be your minimum 2-to-1. Okay. Another thing is that your stop loss is 20 pips instead of 15. It's actually a little bit more because you have to go below the 800 to clear the low that's been created so far. So you're actually about 25 pips almost. So you're barely above a 1-to-1 risk to reward ratio. Okay. So you're not getting a really good risk to reward ratio. So based on just those two factors alone, of not getting a 2-to-1 risk reward ratio, and then also the stop loss being higher, 10 pips higher than 15 pips for the stop loss, those two things for me are a no-go, non-negotiable, right? So if you're just looking at trying to trade the pattern, right, this is start of the day, reset your Asian range, and then you're trying to do this because you're looking for a buy here, all right? This trade is not an ideal setup. So the two main reasons why you're not getting a 2-to-1, and then you're over 15 pips on your stop loss. Now, 10 pip difference between a stop loss may not be that big of a deal for you, but if you're trading a standard lot or higher, it's a huge deal. Okay, because you're not talking about, you know, cents or a couple dollars. We're talking, you know, $100, $200, depending on what your lot size that you're using. Okay, so that essentially can be a big deal, and so that's why mine is set at 15. And if it ain't at 15, you know, it's not worth it to me to risk my own money in order to take a trade. Okay, so that's one thing. So if we play this out, you have another factor that comes in as well that I want you guys to pay attention to, is because of the size of this candle, we're now getting into what? If you're trying to trade this, you're trading this as a type 2 setup because it's right at the low of Asia, right? It's a little bit below, but it really, type 1s, we want to see them, you know, well above 10 to 15 pips below the Asian range or above the Asian range. So this is more like a type 2 setup. Now, here's the problem that you're going to run into is if you take the trade now, is the fact that you're running into what? The middle of the range. Okay, so that's the middle of the range right there, and you're basically running into the middle of the range. Now, the problem is that you may have a scenario where price basically gets stuck in the middle of the range, and it's actually not a type 2 setup, but it's a type 3. Okay, so let's play this out so you can see what I'm talking about. So if you were to take this trade, you have to pay attention to that middle of the range, because if you get rejected in the middle of the range, you have to be prepared to react. And so as you can see, we're basically moving from 5 o'clock all the way until 6 o'clock. So another hour. Okay. And we're straight moving basically sideways within a couple of pips of each other. So we're basically moving in a range of like 8 pips for the next hour, from 5 to 6. Okay. Now, if you were to take the trade, if you took the trade, let's say early on, right, and you didn't wait for any of this stuff to happen, and you took the trade early on, let's say down here, you know, if we have a 6 candle rule that if you're not in substantial profit, you're out of the trade, right? So we're you know, 2, 4, 6, 8, we're way over 6 candles, and the question is, are you in substantial profit? Well, at this, even with this big candle here, the most profit that you would have been in would have been about 10 pips. And that's really not substantial profit to me. When I say substantial profit, I'm talking over 15 pips at least, for you to be in substantial profit, for you to keep the trade going. Now, in this case, it's not, obviously, so we have a problem, right? You see how it's not passing above the middle of the range, and it's also the 50 EMA is right there too, so it's battling with that as well. So it's got a couple things going against it. Okay, so as we play this out, you'll start to see that the play here is not a type 2 setup, but it's going to be a type 3. And so you've had basically an opportunity here right at 5:30, 5:45, and then here's your second opportunity at the open of the US session, which is 8:30, 8:45. Here's your setup here, and then there's your drop. So essentially, if you would have had patience and just waited, okay, the trade was actually this. That was the actual trade. Now, if you would have gotten into the trade here, technically here after 6 candles, you would have been out of the trade. So if you would have gotten in early, you would have gotten out of the trade because of the 6 candle rule. And so you're looking at basically getting into like maybe a break-even trade, because even you're in profit 10 pips, but then you have to your commission and your spread and all that stuff. So you're figuring maybe 5 pips that you gained, or break-even possibly, depending on your broker, and you're out of the trade. But the bigger trade was actually to the downside. Okay, was a type 3 setup to the downside. And if we play this out, you'll see how big of an impact it had here. So that particular trade, went in about 50 pips or so, right? And that was from the very bottom of that candle there. So again, if you have patience and you're alert to what's going on, you can definitely avoid this situation here. Now, what is a good way to avoid that from happening is, if you're just trading the pattern, starting to understand. So if you're trading the pattern and the timing, okay, starting to learn more about the cycle can make a huge benefit to you, because you could know essentially what way to trade this specific day. So if we just look back to the week, so here's the week, here's a full week of trading, right? So we have Sunday, Monday, Tuesday, Wednesday, Thursday, and Friday, right? Sunday, Monday is trap day. Tuesday could be used as trap day as well, and then we actually have the reverse, typically either Tuesday or Wednesday, right? So in this case, it actually happened Wednesday. So here's the reverse, and we go up for Wednesday, and then half the day Thursday, and then we reverse again. Okay, now when we reverse on Thursday, what does this make? This makes peak formation high. So if you're making peak formation high on Thursday, what are you doing Friday? You're selling on Friday. You're not even interested in buying on Friday. Okay, you become a seller on Friday, because you're at peak formation high. You're at peak formation high. Here's one level here, and of course this sets up the drop. There's another level there. Okay, so knowing where you are in the cycle would have helped you avoid a bad trade on this chart. Knowing that you're on peak formation high, you see the M here. Here's the M, and then it starts to work its way down. So knowing peak formation high would have saved you all the trouble on this day, and you could have basically held the trade. All right, let's take a look at the second trade, which was pound USD. All right, guys, so here is pound USD, and as you can see, it's moving pretty damn similar to pound JPY. You can see it's basically stuck at the bottom of that range, but right here, same timing, 3:15, right? Some of you saw a W here, and you can start to see that this on the TDI starts to cross over at the bottom and everything like that. So here again, guys, I want you guys to pay attention to the fact that you have, let's say, you know, signals, right, tools that are telling you something, but I need you guys to pay attention to the fact of what's actually happening in the bigger picture, right? So let's say a lot of you could have taken it, and any of these points here, you would have seen W's, let's just say, and because the TDI here was crossing over, you would have saw that, oh my God, that's a confirmation right there, right? And a lot of you may have gotten into that trade. So if we, as we play this out here, I want you guys to see how long it takes from the initial first of what we think is a W here. So around 3:15. Same thing, 4:45 candle is one that moves up. You can see that the crossover is about to happen here. I believe it should happen on the next candle, which is right there. So here on the next candle is about to cross over. Now again, we have to look at where we are. If you're thinking about trading this and you go long, what does it look like? You know, this is what it looks like right now. If you were to get into that trade, let's say if you're waiting for that crossover to happen, right, which is one of the rules. Well, what happens is you're basically in the same boat as you were on pound JPY, where you're not at a 2-to-1 risk reward ratio. You're risking a lot more than 15 pips. You're risking it's about 20 pips or so that you're risking on this specific trade. And basically, as soon as you get into the trade, you're running into the middle of the range. Okay, so as you play this out, essentially you're going to see here that you get stuck in the middle of the range. It gets rejected. You have the 50 EMA right here rejecting the price for you. And so here you get rejected, and what do we have at, like, what time is this? 5:45. You get a pair of railroad tracks right here in the middle of the range. So what do? You sell. You sell from that railroad track right there over, and that's your 50, 55 pips or so. Okay, but essentially a very similar situation. The only difference is that it was just basically kicking off by itself. It didn't have the 800 here that you can use to say, hey, that's the reason why price is holding. However, you still had the 50 above it, which would tell you, hey, it's holding above, right below the 50, and it's getting kicked out, it's getting rejected, and we're in the middle of the range. So you have those two things. And now if you start looking again at the entire cycle for that week, what does it look like? Same thing, Sunday, Monday, Tuesday, Wednesday, Thursday, and Friday. Sunday, Monday, and Tuesday were the trap, right? That's the first. Came back down, made a big W, and then literally on Wednesday it came back down and went straight across, came back up on Thursday and went right back down. There's your peak formation high right here for the week. There's your high of the week. They're not going back to the high of the week. So you should not be thinking buy. You should be thinking sell. All right. So very important that if you're trading just the pattern and the timing, okay, start to familiarize yourself with not just the patterns and the timings, but if you can familiarize yourself with the cycle and understand what's going on with the cycle for the week, it'll help you, especially during the last day. You already have 4 days of data, right? So the last day should be the easiest day for you because you already have the data for the rest of the week to trade. All right. So guys, I hope you enjoyed watching this video. I hope this video brought you value, guys. Thank you so much for the support in the comments, guys. Let me know if you took any of these trades or if you got stuck in one of these trades, pound USD, pound JPY this week. All right, guys. Thank you so much. Guys, enjoy the rest of the week of trading. Guys, one last thing. Thank you so much for watching my videos. I really appreciate the fact that you take the time to watch my videos. I really hope that I've added value in each of the videos that I make for you guys, and I hope that you're learning something.